Inflation protection, Capital 10X hunts for value among the copper miners. In the current economic backdrop, there's no bigger risk for investors than inflation. There's no escaping it. From cars to gas to food to electricity, prices are rising across the board. How did we get here? Global central banks have significantly increased money supply to combat the COVID-19 economic crisis. Ultra-accommodative monetary and fiscal policy has driven commodity prices higher across the board, which in turn has driven consumer inflation expectations significantly higher. The 1970s are the best proxy for the current inflationary episode. During the 70s, the best way for investors to protect themselves versus inflation was by owning gold and commodities. We believe that applies to this decade as well. Copper is one of the most critical commodities for the future green economy, a key input for electric vehicles, wind, solar, and infrastructure. It's one of the best performing metals in 2021 so far, up 25% year to date. We believe there's still significant upside ahead. Commodities are the cheapest they've ever been relative to US equities in the last 50 years. During this half-century bear market in commodities, investing in mining exploration has rapidly declined. Based on current mine production and future projects currently in development, there'll be a large shortfall in copper supply relative to the anticipated future copper demand. This is a very attractive macro backdrop for copper miners. We screen for value in the producer universe. Small, mid-cap copper producers are trading at a steep discount relative to large-cap producers on every valuation metric. In the value bucket of small and mid-cap copper miners, Sierra Metals, Nevada Copper, and Hudbay Minerals screen very well versus peers, trading at a significant valuation discount. While the large-cap copper universe is expensive, First Quantum and London Mining have screened well on valuation metrics within this group.